Up next, we have Charlie, the founder of the Berkeley Student Credit Union. He's going to be interviewed by Winnie.
Well, thanks again for having me, Lorenzo, and thanks for joining in, Winnie. I am Charley Zhao, MBA candidate at the UC Berkeley Haas School of Business, and also founder of the proposed Berkeley Student Credit Union. And what I want to do over the time that we have here is just walk through what we're building at the Berkeley Student Credit Union, why no one else has done it before at Berkeley, and where we are in the process. So just want to start out with a fact that kind of frames anything that I discuss after this. Berkeley, as a university, ran a competitive RFP for their campus banking partner. This was back in the day in 2015, I want to say. And every credit union that was invited to respond to the RFP declined. The university ended up signing with Bank of the West, which was since acquired by Bank of Montreal. And they recently renewed their contract in 2025 to go through 2035. But this is a rather anomalous university banking relationship because every other major UC campus has a credit union partnership, a formal partnership. UCLA, UC Davis, San Diego, Irvine, all these are served by the University Credit Union. That's the name of the credit union through formal campus partnerships. And Berkeley is the only one without one. So this begs the question of why does Berkeley as a university with 45,000 students and 500,000 alumni around the world not have a credit union dedicated to serving its students and or alumni? Here's a framing that I think is important to hold on to. Berkeley students aren't necessarily underbanked in the traditional sense. They have access to a bank. Bank of Montreal is on the campus. There's ATMs that work. They can direct deposit and so on. What Berkeley students lack, rather, is access to a credit union. And I think it's very important to make the distinction between these two different institutions as the entire premise of what we are building here. A bank is owned by shareholders, and its structural job is to create returns for those shareholders. And the way that it generates returns is by extracting value from the consumer via fees, interest rate spreads, upselling products, and so on. And that's not to say that this is per se malicious. This is just how banks are designed to operate. A credit union, on the flip side, is owned by its members. And that's also a distinction here to make, where banks have shareholders and customers, and credit unions have members who wholly own the credit union. Legally and structurally, a credit union is a financial cooperative where there are no shareholders. So profits are not extracted and sent out of the credit union. They're returned to members in the form of lower fees, higher savings rates, lower borrowing costs, and also better products in that sense. The credit union's institutional incentive is to make its members financially better off over time because the institution and the members are the same entity. And the structural difference matters a lot when you think about, say, myself as a student. If I have a thin credit profile, no assets, limited income, the bank would look at me and see a low margin customer who might be worth something less than, say, another customer. A credit union would then look at me and see a member whose financial well-being and developing that over time is the reason for that institution existing. And so that's where I want to level set on differences between a credit union and a bank. This is also the gap that Berkeley Student Credit Union is trying to fill here on campus. This gap of serving, say, lower margin customers versus your traditional banking customer doesn't really fall evenly across the board here on campus. We see this arise most acutely in one particular population, and that is with international students. At Berkeley, over 7,000 international students are enrolled. This is about 16% of the entire student body. But for the most part, most of them arrive in the US without social security numbers, without US credit history, and also without the ability to open accounts before they arrive on campus, or rather, even arrive through immigration. And so let me maybe walk through a scenario of what actually happens to these students every single year when they come in. You're admitted in March, you pay a deposit, And the international office then sends you a packet, amongst other things, and they will direct you to open an account with Bank of Montreal when you land on campus. Come August, they land at SFO. They open up their Bank of Montreal account on campus with the passport and perhaps their I-20. Hopefully, with everything, they get a checking account, but this is not always the case, as we've seen with the lack of SSN. Then comes the situation of actually living on campus. They need to rent an apartment. Their landlord wants to perform a credit check, but they don't have US credit history. So they either get rejected, they have to find a cosigner, or they have outrageous terms upfront, such as paying 6 months of rent. Perhaps then they want to open a credit card. Same thing, they don't have that credit card history, so they get declined. They get around in the US. They want to buy a used car, and the dealer wants a credit check. Same thing. They need insurance, but same thing. They're looking at credit-based scoring and pricing, and this puts them in the lowest tier. Then looking across the entire 4 years of undergrad, or maybe even, say, my program, the MBA, 2 years of the MBA program, a student is looking at paying roughly $50,000 to $80,000 per year in tuition. Then they graduate and they start working in the US on OPT, hopefully transitioning to the H-1B. And now, at the same time where they're earning real money now for themselves, they still need credit infrastructure to function, but they don't have this credit footprint. And so this is because this banking relationship was not built from their beginnings of coming to the campus or to the US over time, leading to this moment. And so I paint this picture just to say that this is the population of who this type of credit union would exist to serve. These are members who need these forms of credit building products. They need an institution who also understands their constraints and the reasons for them coming to campus. They need also a financial relationship that's designed around their entire life cycle of being a student, graduating and going into the workforce, or perhaps being an entrepreneur and then developing in that career. Not necessarily needing a financial relationship built around how much wallet share that the institution can extract from them. It's also not just international students. Domestic students at Berkeley, they have a similar version of the same problem. They also have thin credit profiles. They have student loans. They have potentially high earning potential, but they don't have a relationship with a financial institution that follows them or has products designed for the transition in various stages of life for them. They might take brand named credit cards because this is just what is offered to them, and they get offered the rates that go with no relationship history. So the bigger point here that I want to make is that a credit union for Berkeley students is not just about providing another checking account to students. It's about creating an institutional relationship that should exist with them from the first day that they arrive on campus and even before that with pre-arrival approvals. And this should be also the institution that follows them for the next 50 years as they work through their careers. A cooperative structure is also what makes this happen, because a bank probably can't sustain this 50-year low margin relationship with someone who has graduated into hopefully becoming a high net worth professional. So that's actually a great segue into perhaps introducing more what the Berkeley Student Credit Union is. I'll call it BSCU just for short. BSCU will be a digital first student governed credit union, and it's currently being chartered through California's Department of Financial Protection and Innovation, the DFPI. And there's various different forms of chartering that you can do. You can do chartering on a national level with the National Credit Union Association and also do federal insurance too through the same entity. But California is one of these states that is pretty interesting, in which they have private insurance. And so we are also speaking with American Share Insurance, as they are the sole private insurer for credit unions in the US in the states that do allow this. And it's something quite interesting where you would think, does being privately insured mean that you are perhaps less safe than if you were federally insured? But you have major credit unions in the Bay Area like SF Fire Credit Union. They are insured by American Share Insurance. And so they are an extremely reputable entity and insurer of credit unions. But in terms of what we felt like was best for our chartering process and working with the state regulators, this is the path that we've decided on going down. With the credit union, just to dig a little bit deeper here, we want to be digital first. And this means that we want to have limited to no physical structures in place via branches, offices, and so on. In the US, there's a few other student-operated credit unions, notably at Georgetown and UPenn. There's a few new initiatives as well at some other universities, but each of them operate physical branches on campus or intend to. This means that you need staffers to run shifts, you'll have cash drawers, lobby hours, real estate. That's something that for the Berkeley Student Credit Union, we want to eliminate additional operational overhead that historically constrains student credit union viability. More importantly, it also helps us prioritize serving members wherever they are in the world. International students before they arrive in the US, but also alumni after they leave campus. The next pillar that I want to address for BSCU is the fact that it will be student governed. Members of the credit union will elect the board. Students will staff the institution, similar to the other student-led credit unions. But I think this is where I have an opportunity to perhaps lead this credit union in a means that the other undergraduate-led credit unions might have some difficulties in. We're guided by an advisory board of industry professionals who span expertise in the credit union spaces, fintechs, alumni who have done this type of work of growing or scaling companies too. And this type of advisory structure is what's allowed Georgetown and UPenn to really persist across the 40 years of their student leadership turnover that you see at the credit union. Traditionally, you see the CEO, the COO being students themselves, but the advisory board or board of directors will tend to be individuals who stay on year over year. And so this model is something that works, and we've seen it work, so we want to hold on to that piece. Then on the third part, I want to emphasize that this cooperative effort is really anchored to a specific membership of the Berkeley student and alumni community. And this is something that really no commercial bank can replicate. A credit union is built around the member itself who joins at admission and hopefully will stay a member for 50 plus years. As an undergrad, you would join in and have your traditional basic consumer banking products like checkings and savings, maybe some basic credit builder. I also want to address why myself, as an MBA student, am founding this rather than, say, an undergraduate effort like at these other student-led credit unions, like at Georgetown, UPenn, or the other current chartering efforts at UNC Chapel Hill, for example. There's a couple reasons. First is on the talent side. At UC Berkeley Haas School of Business, the MBA students come in with professional backgrounds in finance, technology, operations, regulatory work. The Haas FinTech Club, which I'm one of the vice presidents for, has over 700 members across current students and alumni. Our current chartering organizers, 5 are MBA students who come from operators within banks or fintechs. And I want to also highlight that we're not only leaning into the MBA school for this, we're also looking beyond. Most notably at the law school, we have a UC Berkeley law faculty member who serves as a charter organizer as well. And he served in previous general counsel roles in tech as well. To round out that 7 charter organizers, we have one undergraduate UC Berkeley alum, but he's grown and scaled businesses, exited businesses, and we really see him as a strong leader in that capacity. The second main point that I want to hit on here is on the continuity issue, and I touched on this a little bit before, where undergrad-led financial institutions face the structural problem of every 4 years, the entire team will turn over, but every year there is effectively 25% turnover. Institutional knowledge walks out the door. However, with this MBA-led plus alumni network, this gives us something different of board members, advisors who come from industry experience, who graduate, but once they do graduate, stay on, and this structure is built in from the beginning. And just to give a little bit more background about myself and why this was something that I felt like I wanted to pursue, I'd spent prior to my MBA 4 years working with community banks as a consultant at Deloitte, really seeing the broken state of banking. I was seeing tech stacks and core banking systems built in the 80s, 90s, 2000s, and barely hanging on to life. Immense resistance to change within organizations, and also misaligned consumer incentives. Since starting the MBA, I've spent the last 6 months really deep diving into what is the potential for a credit union to fill these gaps. I've conducted tons of regulatory research, talking to credit union founders and banking executives, building the chartering application, recruiting charter organizers, engaging other partners for technology or operations, and also meeting with Lorenzo weekly in collaboration with what Cassandra offers in terms of their tech, compliance, and legal capabilities.
Cassandra is sponsoring the Berkeley Student Credit Union.
And so bringing us to maybe where we are today, I want to recap on all the different entities and bodies that we've worked with. On the regulatory front, at this point, have had plenty of meetings with the National Credit Union Association and also the California Department of Financial Protection and Innovation. And so with the California DFPI, that's where our charter application sits. We've also engaged American Share Insurance, which is the private credit union share insurance that I mentioned. This is the entity where we're making a deliberate trade-off. We can really speed up and expedite the chartering process and also lower potential regulatory friction during the initial de novo phase. On the operational front, we're working with Cassandra. I think Lorenzo is building really phenomenal next generation stack in terms of compliance technology and also on the core banking side. But Cassandra will serve as an operational backbone for the Berkeley Student Credit Union. And this is really a layer that lets us as a credit union operate from the beginning with a small initial staff, but still as a real financial institution from day one. And without this infrastructure partnership, this model of being digital first from the get-go would not work. On an institutional level, we're partnering and building that relationship with the Cal Alumni Association, which is the Alumni Association for UC Berkeley, and also the Associated Students of UC Berkeley, the ASUC, which is the UC Berkeley student body organization. Bringing us to where we are, just want to give a little recap. The chartering application, we're in progress right now with the DFPI, and the organizing team has been assembled. And I think over the summer, we'll take the time when the student bodies on campus are on their summer break to really recap and build out a robust roadmap for how we want to approach the remaining chartering process over the summer, but into the fall time as well. And just to maybe highlight where we want to go from here, this is more near term. This will be after completing and submitting the charter application, working with the DFPI on bringing that charter application through approval. Upon launch, this is where we will have a set of consumer banking products. We'll have the first cohort of members and just get the institution running. In phase 2, I think this is where we want to build out a bit more of the wedge with the international student body, but also across more broadly expanding within the university. And I think this is perhaps on phase 3 where I want to introduce or talk a bit more detail in the actual deepening of this lifetime relationship. The vision that we have for BSCU is the financial institution that follows Berkeley students from the moment they accept admission through the rest of their career. And I think there's one piece that will be perhaps especially relevant for the audience, given our interest in expanding and building out fintech innovation. Beyond just serving our own immediate members of the UC Berkeley students and alumni body, we want to highlight the role that BSCU could play in building out the entrepreneurship ecosystem at Berkeley and in the Bay Area too. And let me maybe explain this with a quick story. A few months ago, I was talking to this one startup founder. He had received acceptance to YC, Y Combinator, on condition for one last requirement, and that was locking in a sponsor bank before that they could really enter the program and start. The problem with this was they couldn't lock in that sponsor bank relationship. And the reason is there kind of exists this chicken or egg dynamic right now that I think is one of the largest roadblocks to fintech competition right now. Sponsor banks, they want to see growth and revenue numbers before they'll partner with a fintech. Of course, this is due to certain risk profiles that the sponsor bank wants to work with or compliance measures. But at the same time, without a sponsor bank, many fintechs can't offer the banking services that are core to their value proposition and growth. And so they can't get traction. And that means that they can't get a sponsored bank. And so they don't end up launching. You just end up with structural bottlenecks where promising fintech companies, like the one that I was just referring to, but also those coming out of the Berkeley ecosystem, can't get off the ground because the underlying banking layer is gate-capped. And I think in this, if we can build out the Berkeley Student Credit Union to serve as potentially a banking sponsor for this fintech ecosystem that is in our immediate vicinity, this is something that I think ultimately will be net positive when it comes to building out innovation in general here in the Bay.
Charley, would you like to share how much longer you're in this MBA program, just for perspective?
Yeah, definitely. I just finished my first year and I have one more year remaining. I think the chartering process and getting the credit union operational should run me close to around the end of the MBA. But my plan and my goal is to stay on in that advising role and also building out the community for the operators to take this operational from day one.
And so your plan is to stay on as an operator after you graduate?
More in advising
Okay.
capability. I think the day-to-day operations, that's where we see the existing model at universities like UPenn and Georgetown working out well, where undergrad students, graduate students, they can carry out that in a functional capability that the regulators are comfortable with, frankly.
Because the technical and legal and compliance are provided by Cassandra. And so the students are focusing on the community organizing, the member service. And
Yeah.
so that's what the day-to-day life of student-run credit union operator under this model would be like.
Charley, you can talk a little bit about, given the stage of the journey that the initiative is at, what type of outreach you're doing, and specifically what assistance would you be soliciting from a broader audience, whether it's anybody on this call or anybody who's perhaps connected to other people who are currently.
Yeah. And all the
I appreciate that, Ben. Anyone who wants to serve in advising capacity would be on the operating front. I think this is really where we have the opportunity to make the Berkeley Student Credit Union stand out. I would love to engage in any type of conversation about that.